Comprehending the U.S. national debt and its consequences. The financial condition of the U.S. government is often described as critical. Currently, the U.S. national debt is approaching $34.88 trillion. But what does this staggering figure signify? When you already owe nearly $35 trillion, how significant is another trillion? Contextualizing the national debt. To put it in perspective, the national debt relative to the gross domestic product, GDP, of the United States is at its highest level since the conclusion of World War II. Additionally, the U.S. budget deficit stands at almost $1.8 trillion, a 3% increase from last year's $1.2 trillion. Despite a consistent rise in U.S. tax revenues, the budget deficit worsens every year. If you're questioning whether a budget deficit of $1.2 or $1.8 trillion is substantial, consider that the U.S. government spends over $1 trillion annually on interest payments alone. This implies that most of the borrowed money is used merely to cover interest payments. The impending crisis. Many wonder if the U.S. can indefinitely delay addressing this issue. This approach might seem feasible until we encounter a sovereign debt crisis. This crisis looks strikingly similar to our current situation. Here at All Things Money, we educate people about the economy and financial markets. Understanding these concepts is crucial because the majority of investment returns have historically been linked to the performance of the U.S. economy. Modern monetary theory, MMT. Modern monetary theory, MMT, asserts that government finances differ fundamentally from individual or household finances, dismissing concerns about surpluses or deficits. However, there is no such thing as a free lunch or a magic money tree. The primary difference between government and individual finances lies in how money is acquired. Governments take money. Understanding the free market. In a free market, money is made by offering something valuable in exchange for money. For example, if you recently bought a pair of shoes for $110, you essentially valued the shoes more than the money. This exchange benefits both parties, as both receive something they value more than what they give up. Government revenue collection. Conversely, the government collects money through taxation, compelling citizens to pay under threat of legal consequences. Year to date, the U.S. government has collected $3.28 trillion from taxpayers, a 10% increase from the previous year. Despite rising tax revenues, government spending continues to escalate, highlighting why taxes are inherently unpopular. The growing budget deficit. When taxation becomes politically unpalatable, governments resort to borrowing, creating a budget deficit. For instance, if you earn $100,000 but spend $120,000, the $20,000 deficit must be borrowed. The U.S. government operates similarly, with deficits worsening annually to the point where borrowing trillions is normalized. The role of the money printer. When borrowing becomes unsustainable, governments often turn to central banks to print money. This increases the central bank's balance sheet, leading to inflation as more money chases the same amount of goods and services. Recap. Governments first tax to generate revenue. When taxes are insufficient but spending continues to rise, they borrow, creating a budget deficit. Eventually, they rely on central banks to print money, leading to inflation. When all these avenues are exhausted, a sovereign debt crisis emerges. 4 options to resolve a sovereign debt crisis. 1. Get finances in control. Governments can reduce spending to match tax revenues, though this is politically challenging. 2. Keep borrowing and eventually default. Continual borrowing can lead to default, causing severe short-term consequences but potentially healthier long-term outcomes. 3. Call on the money printer again. Governments can resort to printing more money, but this risks runaway inflation. 4. Implement structural reforms. This involves making significant changes to the economy to sustainably manage debt levels. Conclusion. Understanding the complexities of the U.S. national debt and its implications is crucial for grasping the broader economic landscape. As governments navigate these challenges, the solutions they choose will have profound impacts on both national and global economies.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.